Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about COFCO JOYCOME interim report. COFCO JOYCOME Foods Limited offers a diverse range of businesses and services, including hog production, livestock slaughtering, feed production, fresh pork sales, processed meat products manufacturing and sales, meat importation and sale, pork, beef, poultry, mutton byproduct sales. The company operates under various brands, including Maverick and JOYCOME. The recent surge in COFCO JOYCOME stock price can be attributed to a combination of several key events. A strong year-to-date performance, with a 32.37% increase as of September 10, 2025, set the stage for further growth. The company's stock momentum continued to rise, with a 30% increase over 3 months and a 32% share price increase in just 2 months prior to September 12, 2025. The optimism surrounding hog production capacity regulation also played a significant role, with the stock rising by nearly 6% on September 10, 2025. Improved financial results, including a slight rise in profit for the first half of 2025 and a notable turnaround from losses in previous years, further boosted investor confidence. Additionally, the strategic acquisition of COFCO Feed Co., Limited, in October 2024, enhanced the company's integrated supply chain and market positioning, which was well received by the market. These cumulative factors have contributed to a significant positive trajectory for COFCO JOYCOME's stock price over the last year, resulting in an overall growth of 38.17%. The primary drivers of revenue growth or decline can be summarized into 2 main categories. On the growth side, strategic acquisitions, expansion of feed processing capacity, and increased hog production volume have contributed significantly to revenue growth. Additionally, consumer market recovery, driven by demand for health and quality products, optimization of business structure, and targeted advertising strategies have also played a crucial role. On the decline side, factors such as African swine fever and blue ear disease, sluggish hog prices, uncertainty factors like import tariffs and material costs, and decreased sales volume of existing products have led to revenue decline. Furthermore, national beef import, volume decline and reduced sales to COFCO Corporation and its subsidiaries have also contributed to the decline in revenue. Overall, these drivers highlight the importance of strategic planning, market adaptation, and effective management in driving revenue growth or mitigating decline. Net income and profit margins have undergone significant changes over the past year. Initially, net income decreased by RMB 23.34 million year-on-year. However, a closer look at the data reveals a remarkable turnaround in the first half of 2025, where the company reported a profit of RMB 203 million compared to a net loss of RMB 315 million in the same period in 2024. The improvement in net income can be attributed to several factors, including strong sales volume growth in fresh pork products and increased revenue from brand business. Additionally, the profitability of the brand business has improved significantly. The gross profit margin before biological assets fair value adjustments also saw a notable increase of 7.2 percentage points to 8.2% in the first half of 2025, primarily driven by the hog production business. Overall, these changes indicate a substantial improvement in the company's financial performance, with net income and profit margins showing significant growth over the past year. The company is indeed generating positive operating cash flow. This is evident from 2 key points. Firstly, page 21 explicitly states that cash generated from operation activities, main source of operating capital, indicating a positive trend in operating cash flow. Secondly, the financial statement on page 45 shows a net cash generated from operating activities of RMB 105,744 for the 6 months ended June 30, 2025, further solidifying this conclusion. The company's debt level and interest expenses have undergone significant changes over the years. In terms of debt level, there is a mixed trend observed. On one hand, total debt increased by 78% from RMB 4,231 million to RMB 7,551 million, page 23. Additionally, bank borrowing saw a substantial increase of 136.4% from 2,609,132 RMB 0 to 6,190,137 RMB 0, page 41. However, new bank borrowings in 2025 were significantly lower at 5,286,288, page 45. And the debt level decreased by 39.6% from RMB 967,824,000 to RMB 584,278,000, page 78. Regarding interest expenses, there is a notable increase observed. Interest on bank borrowings increased by 36.4% from RMB 38,494 to RMB 52,509, page 58. Furthermore, interest paid in 2025 was $56,484, page 45, indicating a substantial rise. However, interest expenses decreased by only 1.42%, page 77. Overall, the company's debt level and interest expenses have experienced significant fluctuations over the years, with both increases and decreases observed. The company's financial performance reveals both successes and setbacks across various segments. The processed production, intermeat, fresh pork, and import segments all demonstrated strong profitability, with notable profits in the hundreds of thousands of RMB. In contrast, hog production struggled, resulting in a significant loss of RMB 375,158. Additionally, the meat products segment reported a mixed performance, with both profit and loss figures appearing in the financial summary. Overall, these results indicate that the company's processed and imported goods performed well, while its hog production and certain meat product lines underperformed. There were no notable acquisitions or divestitures in this period. The company's financial activities remained focused on organic growth and internal development, with no significant external transactions taking place. The company has a history of paying dividends. In the recent financial year, it distributed $8,411 to non-controlling interests and $42 to a former shareholder. Additionally, the company received a dividend from an equity instrument valued at FVTOCI, fair value through other comprehensive income, amounting to $37,500 in 2025. That concludes the financial summary for COFCO JOYCOME. Feel free to comment below, and I will be happy to answer them when possible.